Hello, and welcome to another update video about ADA. No change to our direction or wave count overall. Yeah, we have made some adjustments here on the very short term, just to give you an idea of the latest pullback zone that I think is going to be relevant. Just a quick recap here, zoomed out, you see the movement since the December lows. We rallied in 5 waves. Up here we expected a pullback into the green support area. That happened. And we are now on track to rallying in a third wave. Third wave is up there somewhere. Target for the third wave is based on the Fibonacci extensions. The 1.618 extension of wave 1 is typically an ideal target, in crypto especially. Yeah. I would never rule out that a third wave can also just go to the 1-to-1 ratio. That would be at 47.3 cents, so that is a key level. However, it's not an ideal one for a third wave rally. What I can never rule out is that this is just an ABC. So be aware of that. So the 1-to-1 ratio is already a level to watch out for. And we're getting closer. We're getting closer. I mean, ultimately, it's following the direction here. And we are just getting closer to these targets. So let's see. But that's generally the idea. The 1.618 extension is, again, up there around 58 cents. Actually, that would be the ideal target for a third wave based on the latest lows in this market structure here. Now, if we zoom in a little bit, of the March lows, as anticipated, we rallied higher. Idea was to find some support in this green support area and then go ideally into an impulse, which it did. Came down in a correction, had a trend reversal area here, rallied again in 5 waves, gave you another trend reversal area, which worked out. Rallied again in 5 waves here yesterday and gave you on the way another trend reversal area, which worked out. I think none of them broke here for ADA, these relevant ones. So I hope that gave people a good entry. I mean, I can really only give you the chart and the tool and give you my analysis, and you have to find a way for yourself how it works for you. I can never tell you to buy or whatever. That's an individual decision. I don't know your portfolio. I don't know your cash flow. I don't know your risk appetite. I don't know how you're trading, right? What time frame and so on. The idea of this analysis is to provide a picture on different time frames about where the trend is ideally going with ideal pullback areas. But yeah, besides that, I'm not allowed to give you any advice anyway. It's always worth mentioning from time to time as the channel grows. But you see that in the disclaimer in the beginning anyway. But yeah, the idea is it is going to go higher from here as long as critical support levels are holding. Again, I'm watching if this was a wave 1. There's a bit of a possibility to put, actually, you can put it to both highs, but it doesn't really matter in the short term in terms of the pullback. Basically, you have a double top here. And you can, there can be discussions about, okay, do I put the wave 1 here or here? Now, that's a bit of an academic discussion, doesn't really make a difference for trading. So this is all about practice here. So we don't really care about it in terms of measuring the pullback area. It doesn't matter. So what would be now, if we say, okay, we rallied again in a wave 1, this is another wave 2 pullback, what would be the ideal pullback zone? And I'm going to keep them orange because these are now the lower time frames, so they are fragile, more fragile, but doesn't mean they wouldn't work out. Yeah, it's just sort of that, be aware that on the lower time frame things are changing much more frequently. Here is the next pullback zone. We are already in it, and that doesn't matter if I place the high here or here because it's basically the same price level. And then you can discuss, depending on what count it is, if this was already the A wave, we rallied in B and we're now coming down in C, or if this was the A wave, this is now a B wave, which might develop and go a little higher, or we come down and C. That doesn't really matter in the short term. It could even be some kind of a sort of triangle, but wave 2 can't be a triangle, but maybe the subwave structures. So don't get too confused about the subwaves. I think we have a good case to make that it couldn't find support again in this support area. Relevant support is here, 35.8 cents. Oh, by the way, no, forget what I said. I added the wave 4, wave 2. Yeah, okay, so here, this is actually the relevant support for a wave 2. Now, sometimes you don't see them get into these areas. As you can see here, it hasn't reached the 50% retracement. Yeah, so forget about what I said. Ideally, if it's a wave 2, it should come down a little lower. Where there's no guarantee it will. the trend is certainly up against that support area. So as long as we're holding 34.1 cents now, it can give us a third wave rally, right? And that would be a third of a third. So it would normally be quite bullish. Be aware that against this level, we can focus on higher. All I can tell you is that in an ideal case, a wave 2 will go back to the 50% retracement. Now, sometimes they only touch the 38.2. So I will give you that as well for info, but it's an area where normally, in most cases, you would see a wave 2 break below it. Yeah, because it did it here, it did it here. Oops, and ADA actually pulled back quite a bit in the last few times, and here. Yeah, so the golden ratio is normally an ideal one, 35.1 cents. Yeah, but just for purposes of risk management and understanding support, here the 36.5 cent level is the very first relevant one. It actually touched it here when it came down. So yeah, you know, it could very well be this was the A wave that often reacts to the 38.2 fib level. This is the B wave, and it comes down once more here. Right, that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.